Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for June 14th, 2010. This is Patrick Ceresna. Next here, I want to take a look at the S&P 500 using that SPDR exchange traded fund symbol SPY. We were talking how critical that 105, 106 level was on the downside, because if the market was to break down below that area, it would open the window for an accelerated sell-off down to the 100 level on the downside. The bulls did a very good job digging in and holding that support line, not letting it break on the downside. So we've seen at the end of the week here a little bit of a counter rally that has actually pushed us right back to the 110 to 111 zone on the upside. So now that we're up here, we're again at a critical level. We'll probably see that 110, 111 zone tested again early this week. But in the bigger picture, if that bulls can actually contain and hold this, we could theoretically see a push even as high as the 114 area on the upside. In the bigger picture, the sell-off that began back here in April and May more than likely isn't finished, and we'll probably see some further weakness going into the summer. But at this stage, we want to see what degree of strength the bulls can have. So far, these counter rallies have, even though they've been pushing higher, have been relatively weak, and there's been very little follow through. So if we get up into these higher zones and subsequently there's no real follow through behind the bulls, we're going to be expecting that to eventually roll back down and start another full sell cycle, which would probably eventually see this market test as low as the 1,000 level on the S&P, if not slightly lower. Again, now that 105, 106 level has held, we're not expecting this downdraft to occur immediately. The only way, again, that we would be forecasting a downwards move is below the 105, 106 zone. But for now, if we hold those lows as a short-term low, we are again expecting the market to potentially continue to retrace higher, and that could take another week or two to do. Next, I want to take a look at the ISE US Regional Banks Index, which is a symbol JLO, and we had a false start on the downside here, but as soon as the S&P and the broader markets held their support lines, the buyers quickly came back into the regional banks. So we just had a small short-term bottom put in around the $23 area. At this stage, there is room for this to continue to retrace higher if the whole market does. If it is, we'll be expecting it to come back and retest the upper end of that 25 to 25.50 area on the upside. But in the bigger picture, we still believe that this is a good sell-off that more than likely will bring some further weakness into the summer. So we're not anticipating this to be anything but a short-term rally. Next year, I want to take a look at the ISE Syndex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And again, we had a similar breakdown attempt last week. And again, the bulls dug in and held that 104 to 106 focal point. We had some downside targets pushing all the way down into the 96 to 100 zone on the downside. But since that support line has actually held, that counter rally came back in. Again, we're looking for, at this point, some further testing of this 111 to 112 focal point up above, but retracements can even go as high as the 116 area on the upside. In the bigger picture, we're not anticipating this to be a sustained rally, so we're just going to see how far they can take it. We are still expecting some further weakness into the summer. Next year, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. We drew out that focal point right down at the 875 to 925 area, and more or less this past week that support line held, and more or less we're getting a little bit of bounce like the broader markets. It's very important to recognize that the home builders have had relative weakness to the broader markets, and the selling has been far more intense in this sector than in the other broader market counterparts. So at this juncture, we would want to, if anyone wants to trade to the upside, probably going to some of the other indices is more prudent. More than likely, we will probably see some retracing higher, maybe up to even as high as the 10.5 to 11.5 area, but it's quite possible we never actually even see that upside target during this counter rally. We might only see $10 or more. Eventually, when the home builders exhaust itself on the upside, we are expecting some further retesting, not only of this 875 to 925 to solidify a bigger picture low, but also we may in fact see lower lows that push even the $8 level or lower on the downside. Next here, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM, and we've seen some very good relative strength in the natural gas index relative to the other indices, and this is certainly one that could be construed a little bit more bullishly. The selling that occurred in April into May was very, very intense, but the selling also was contained at some key levels. Subsequently, we've seen some very good rallying over the last 2 weeks, pushing higher highs. We've now come to the top end of the retracement zone that we marked off right here, and have that green area box marked off as the 106 area as the top end of that retracement zone. If we have any bullish breakouts above there, then it opens the window for us to come back and retest where all the highs were put in around the 112, 114, 116 area. So that certainly is an indice that everyone could be watching for some potentially bullish opportunities. But in the same regards, if we don't get above this 104 to 106 area, then we still want to be cautious, because markets tend to come back and retest lows. If we can't get above this area, then maybe coming back first to retest that 93 to 95 zone on the downside, or maybe just even as low as the 98 area. But nonetheless, we'd be cautious if it doesn't break above this area. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. More or less, we put in some lows around this 500 to 510 area. We've had a lot of relative weakness coming out of the FTSE relative to the market because of all the issues that are occurring in Europe and UK. Essentially, at this stage, we continue to consolidate. Whether this is going to be a triangle or a wedge, uncertain. But at this moment, we are expecting further rallying up into these higher zones. But as soon as the rallying subsides, we are more or less expecting this indice to roll over again. So we're only looking for short-term bullishness. That was your ISE Equity Index Outlook. Thank you for joining us.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.